In this video, we're going over a day trade recap from Dr. Metals. Dr. Metals is one of the best zero DTE traders in the world, and he has a course out called the Statistical Day Trading course. If you want to learn from him, we encourage you to take a look at that course or join the Dorian Trader, and you can learn firsthand from him and others at the Dorian Trader.
Hey, O'Brien, Doc here. How are you?
Hey, good morning. I'm well. How about yourself?
I'm well. Hope everybody's having a good Friday. I did post in the day trade forum yesterday, and fortunately, pretty calm day. It was a smaller position, kind of a half size thing with like 500 of risk on either side, and entered around 11:30. And honestly, for the time I was in the trade, which actually was, man, maybe up to like 2:30, 2:45 and whatever, relatively calm. I mean, neither side was really threatened a whole lot. And so, you just never know with the market. But we had some events, some news yesterday and all that kind of stuff that, had me worried it was going to be a little bit more topsy-turvy throughout the whole day, but it really wasn't. So nice week thus far. And I think, honestly, we'll sort of see how things go after Powell speaks and that kind of thing. At most, it'll be another small position a day, or I may take the day off and just enjoy a positive week. So we'll see. Yeah.
And so it looks like you rolled up the call side a couple times yesterday. Is that correct?
That is correct. And I wound up, kind of, it's weird, that little $90 profit thing right there. When the put side had gotten down to, like I said, that degree of profit, I basically tightened my stops down so I would at least go home with that amount. And I didn't have anything left on the call side, so I just put a little bit on, like $100 or whatever, just to buffer, a little bit of a, reversal and kind of lock in that profit on the put side. I wasn't willing to hold throughout power hour for the other $200 I could have gotten in the put side, And honestly, as it turns out, that was a good call because we went down pretty good, and so I would have likely given all that back, to be honest. When I look at it, yeah,
absolutely. So your trading yesterday was, the timing was awesome, the decision making was awesome, all of that played in a factor for you to be able to have a calm day for yourself, right? No one on the call, or most people on the call, wouldn't say yesterday was calm, right? But you did a zero DT trade and you're using the terminology calm because it just all played out the way you executed.
Right. And like I said, it was just a good interval where, like I said, neither side was really challenged in that duration. But again, it just goes to show you, all that gamma in the last hour, that put side would have turned into a loser, probably a full 3x loss. I was surprised how much we went down.
Yeah, me too. That wasn't expected at all from the previous day, huh?
Yeah.
So this is pretty awesome. So if you play today, you're gonna play a small hand, maybe 10 contracts, something like that.
Correct. Yeah, if that. Yeah.
Okay.
But
all right.
Okay. All right.
So awesome.
Hey, Doc, can you see O'Brien's screen? He's showing your trade from yesterday.
Yeah.
Can you just walk me through, because I'm just so dense here? What did you put on first? What did you put on second? What happened?
Yeah. So the first set of strikes, the initial position was the 44. Is that 55? Yeah. And then the original put strike was that 42.85. Okay. And for
40,
basic
42.
Wait a minute. It's hard for me to see. Let me see if it. 43.65 was the original put strike.
Okay, got it.
Yeah.
But the 43.05 is your stop.
Yes, correct. Yes, very wide. Correct.
Okay.
And equally, wide on the call side too. And you see, I put on like 10 contracts for like 50 to 55 cents kind of deal. So
Okay.
these were single digit deltas, like more like 6 or 7 type deltas, you know, and entered around 11:30. And then with the way the market went, that first call position, the 44.55s, you know, it wound up, you know, essentially all the premium kind of coming out there. And
Yeah.
I still had at that time, you know, a decent amount of premium to still get on the put side. And so, you know, when those opportunities happen and you've got that kind of asymmetric decay where one side's pretty much giving you all the profit, I mean, you can look at it two different ways. You can say like, hey, I've won on the one side, so you know, let's just see how the other side does. But in my view, not having on an equal amount of risk on both sides, I sort of view that as like that's actually the riskier proposition. You know what I mean? So I went on ahead and rolled down to like that 44.45 and took
Okay.
in like another $500 to balance out the 500 of potential, you know, profit on the other side in case it wound up getting stopped out. You know what I
Got
mean?
it. Okay.
Yeah.
Got it.
And so that was that. And then the 44.15. Now this is not kind of core thing or whatever. At the time, this is later in the day. I basically had like the $300 worth of profit on the put side, you know, and it was about 245 or so. And again, the 44.45 had pretty much like decayed away to nothing. And I put on just a little bit more risk on that side, another $100 or whatever at that 44.15, just to basically buffer out the little bit of I tightened my stops down from like a 3x loss on the 43.65. I tightened that down so that I was going to go home with that $300 worth of profit. You know what I mean? And that little bit of call side premium, that $100 at that 44.15, that was just to have a little bit, you know, on the opposite side there. And I had set that to stop out at 2 times whatever I put it on at. And again, you don't have to do that. That was just, you know, trying to eke
Yeah.
out a little bit more. Yeah.
But go to the put side one more time. Your original position was a 43.65.
Correct. And that
And
never changed. Right.
and that never changed. So ultimately,
Yeah.
you took that risk off, and you let the long side expire worthless, essentially. Is that right? The
Yeah,
43.05.
yes, because
Okay.
I'm only paying 5 cents for these, you know, there's generally, unless the market makes a really extreme move, there's generally no value left in them. You know, you can't really sell them back or anything. So I'm going to eat that, you know, that
All
30
right. And
bucks.
so
Yeah.
what's the 37.75? The two that
Oh,
like
that's an older position that
okay.
just happens to be expiring that day. That really wasn't
Got it.
part of the zero DT. Yeah.
Got it. All right.
Yeah.
Thank you. That helps. All right. There
Yeah.
we go. Now I understand.
hmm
Thank you.
Okay.